Be fearful when others are greedy, and be greedy when others are fearful. That is the famous quote from the Oracle of Omaha, Mr. Warren Buffett. And it's something that we tend to live by because when stocks are all going up and hitting new highs, everyone gets greedy, and inevitably stocks hit a point they can't sustain and start to fall. Same is true when the stock market is a mess. Like right now, Tesla down 20% in the last month, Google down 6%, Apple down 2%. But when others are fearful and bailing on what not long ago were some of their favorite stocks of all time, it might be the perfect time to buy. Today on Dumb Money, the scientific way that we track the fear and greed of the market and how you can use the exact same data that we do to decide if now is the best time to invest.
This is Dumb Money Live.
Hey there, Dave here along with Chris and Jordan. We are Dumb Money on a special Halloween edition of Dumb Money Live. In addition to fear and greed, I also do want to talk about the Halloween effect. More on that in a minute. But first, Chris, is that a costume or is that just what you decided to wear today?
Dude, I have finally figured out a way to wear Crocs. You can't see they're not just any Crocs. The beaver Crocs. This is actually the first time in my life, believe it or not, that I've ever worn Crocs for this costume. And me and Amy went as Justin and Haley Bieber. You've probably seen that trending TikTok where they're walking out of the club and Bieber's in this exact getup and she's like in a stunning red dress. So, Amy got to dress up. I got to dress down. I got to buy my first pair of Crocs, dude. So like this is the perfect Halloween thing for us.
And everything else you're wearing, including the hat, was already in your closet. And Jordan's, I'm just dressed as a Dumb Money host, wearing my signature black T-shirt. Jordan, though, that's a costume. That's a finance bro costume with the vest, right?
I guess it's just cold now. Apparently, it's cold in Texas.
Before we move on, we do have to ask, we really would appreciate it if you would take a second, smash the like button. What do I usually say? Smash the like button, like the smash button. It has been a minute. We have not done this because I've not had internet, but hopefully I do have fast enough internet to do a show today. This isn't my normal studio. I'm getting settled into my West Coast studio. Still have some work to do on the camera and lighting here, but Chris, Jordan,
Dave, can you show your view or no? Is it possible to show your view?
Yeah, we can show it here. Let's go full screen and just loop around here. This is what I'm looking at, and hopefully the next time we do a show, I'll see if I can get enough light in here to have that be my view going the other way.
After we do our segment on, the investment segment, you got to tell us why you bought this house in Mexico. Like you got to just tell us the rationale behind this, man. We're still trying to figure it out.
Are you kidding? Did you see the view? This would be like a $20 million house if it were just 45 minutes north in San Diego.
True.
That's true.
So that's my rationale in a nutshell.
Fair. Very fair.
Okay. Fear and greed, though, the two most important words for investors, and something that most investors just don't understand and they don't know how to use to their advantage. So I want to start with asking you guys, how do you use other people's fear to your advantage?
Go ahead, Jordan.
Well, I mean, I'm the worst, right? Because I get freaked out, especially, but for good reason, right? I think when we were going through the pandemic, it was pretty apparent that everybody's fear, was slightly justified, but that the Fed was coming in on the other side of it. And people started to see that, and it was an easy time to take advantage of that fear. And so I think if you can see through the fear, and if you've got a good case for an investment, it can make perfect sense to invest. But there's also fear that's justified, and that's what we have to decide. Is that what's happening now?
See, but in my mind, there's always this kind of cyclical cycle where there will be times when people are fearful, but in history, we've never seen a time where it didn't turn around. And we've also seen it. It's this curve. It goes to extreme fear and then extreme irrational exuberance, as which one was that? Greenspan used to say. And when people are thinking everything is going up and the stock market will never fail, that's when it tends to fail. And it's not like the stock market doesn't have a cap. I mean, historically, the stock market does go up over enough time, but it's like it's this cycle. And so when people are bailing on stocks and stocks are going down, historically, that has been the time to buy.
That's correct. Now, but you got to figure out when is that time, because, when you've got historic low volatility, when you've got rates super low, that tended to be around 15, 20%, off the highs, which is about where we are right now. We're probably 13, 14% off of that, the 2021 high. But if you look back to like a 2008 or a 2000, that number was close to 50, 60%. Right? There was fear for a long time, and things that were cheap just kept getting sold.
So, guys, remember when we decided to do this episode, we looked at this fear and greed index that CNN has. I don't know if it will adjust.
Yeah, if you just Google fear and greed, I'll try to pull it up here. But
Yeah,
if you
you're
Google fear and
basically
greed,
pointing
you
a
should-
flashlight at the at the camera. It's not showing up.
It's not going to work. No, but yeah, you Google that. When we decided to do this episode, and Dave, you delayed it a little bit with your move, but it was at extreme. It was like full extreme fear, as far left as the gauge goes, and we're back down to just the worst of normal fear. It's still pretty bad. But what I want to talk about. Oh, there it goes.
I'll be able to get this up here in a second.
So
this is the CNN Fear and Greed Index, and you can see right now we're in the fear category. We're not in extreme fear, but
we were.
Yes, and this whole thing is based on a whole bunch of different factors. Market momentum is an extreme fear. Stock price strength is an extreme fear. Stock price breadth is an extreme fear. Put call options is an extreme fear. Market volatility is neutral. Safe haven demand, extreme fear. Junk bond demand, extreme greed. And I think those are all the categories there.
Okay, so I want to bring something up, and that is a similarity that we are seeing with this market turmoil that we have seen 4 times in the past. Okay, and I want to talk about it because no one's talking about it. 1987 Black Monday. I don't know if you guys remember that. We were kids, Dave. I will never forget it.
I would have been 6.
we were a little bit older, but
I actually remember hearing about it. I remember it being a news item, but I didn't have money in the market because I was what was that, 87? Yeah, I don't know my age.
Dude, it was
7. I was 7. Yeah.
I was barely a teenager, but I had family working on Wall Street. It was so brutal. It was insane. Black Monday, 1987. Again, we were older. At this time, we were fairly active investors, but the .com bust, dude, I'm talking about 90% of every stock that anybody I knew was zeroed out, basically.
I definitely remember the .com bust. I was working at Yahoo at the time, and all of my stock options, which for the first time in my life, I was a paper millionaire, but with all these stock options that I was not allowed to sell. And I worked there for a decade, and still all of those options were worthless. They kept throwing new ones at me, but those were worthless options.
Dude, that was honestly ridiculous. Okay. Fast forward to the 2008 mortgage collapse and ultimately market destruction of 2008. Someone who was very close to me that had been investing and saving money for 40 plus years came to me one day and said, I cannot take this anymore. We cannot take this. I'm selling. I think he sold almost everything that he had ever invested. Emptied out, as much as he could of all of his retirement, all of his savings. And that happened. Okay. Like that was Guys, you remember how bad 2008 was. It was disgusting. It was like the freakiest, most devastating event for investors. Fast forward again to 2020, the pandemic market crash. We're talking what, 45%, Jordan, in a very
Was it that
short
much? I
period.
thought it was like 35 or 40, but it was a lot.
Maybe it was 40. I guess it really
And
depends on,
there were two
what
specific
bucket of
days
stock.
there. It was the third worst day for the S&P and the sixth worst day for the S&P. Both happened in 2020 in March.
So I lived through all 4 of those events, and let me tell you, there was a similarity with those events and what's happening right now. Even though what's happening right now feels a little bit different, there is a strong similarity, and no one's talking about it. The similarity is that in the back of my head, and I believe in the back of almost every single investor's head, you were thinking, are we going to make it out of this one? Meaning, is there a future for us?
Is this the
Okay, and I'm
last
not
time?
just
Is it
I
ever
I'm
going to
not just saying that.
is it collapsing
Yeah,
for good?
you really felt in each of those
Like, are we
times
gonna go
there.
into like a Japan situation from the 80s, right? To where the
Yes!
market just never recovers.
Or
Right.
worse. You thought in each of those scenarios, this is such an anomaly what just happened to us. We have never seen something like this before. I mean, 87, there were similarities to 29, but that wasn't a good thing, right? Like, are we going into another depression? Like, each one of these times, we really believed we didn't we hoped that we would come out, but we really believed that this time things were so messed up that we might not make it out. We might not get back to where we were before. And that's the way I feel today. And I'm just reminding myself that I felt that same exact way 4 other times for different reasons. And I think a lot of people watching the show probably haven't lived through those 4. Maybe they lived through the 2020, which was a quick snapback. And every time there was something that brought us back. Now, the 2020, it was massive government stimulus, right? And it's probably not going to be that this time. But there's always been something, and it's something that we weren't thinking of. It's something that we didn't expect and couldn't really predict. Um, I do
But there's also
feel
something that you can predict that always happens, and that's called time. If you just
time,
give it enough time,
time,
the
time.
world,
But
unless the world actually comes to an end where your stocks literally don't matter, I mean,
but
give
you
it
have
enough
bigger
time. What is
issues then, Dave.
the one thing that you're talking about?
Yeah, you have bigger issues then. And to be honest, for the last, I would say 3 to 5 years, probably 6 years, Jordan, we talk about this all the time. I was not comfortable with not having gone through a major shakeup, a major recession, a major down period. Even when we went through the pain in 2020, it was too short lived. It didn't feel right to me. The fact that we snapped back as quickly as we did on government stimulus, I said, we're going to pay for this. Everybody said we're going to pay for this at some point, and we're paying for it. Well, the suffering that we're going through now as investors, the feelings that we have of, oh my gosh, we screwed up, the government screwed up, we all screwed up. Are we ever going to get out of this hole? If you don't feel like that, you could never get to the other side of having another bull market. Psychologically, we can't get to the other side. Okay. This is needed. This is really, really important. This pain. And by the way, the pain can't be 2 months of pain like it was in 2020. Okay. And then we're all saved. It has to be real, real pain that all of us have to feel in our portfolios, in our lives, in our job security, in our savings, in the valuations of our house, or inability in this case to buy a house because interest rates are skyrocketing. I mean, it's always something different, but I feel the fact that we're here, we're finally here. And I don't know how long it's going to last. I don't know if it's another 3 months, 6 months, or 2 years. I don't really care because the bottom line is I know that we will get out of it. I really feel it. We will get out of it. Even though it doesn't feel like that today. I know that because in the past we've always come out. Maybe it's AI, maybe it's something else, maybe it's, you know, again, another quantum leap in technology that AI and automation and robotics are part of. Um, Something's going to happen that's going to pull us out of this. There will be a new groundswell of companies, of technologies that will set the mark for the future. And I do know one thing, that in that scenario, you want to, we're not financial advisors, but for me, I want to be in the investor class. I want to be allocating capital to that thing, whatever it is. I want to be invested, mostly invested. And
Yep.
these are times when I just want to do less, but I want to stick with it.
Yeah. And you want to find a few good trades in good companies that are going to survive. And when the whole market turns, are going to outperform the rest of the market. And I think we have one of
Yeah,
those trades coming up in our next show.
yes, we do have one of those trades coming up in our next show. We won't talk about today. By the way, we had an insane trade last week. Congrats to everyone in the community that had been working on and invested in deck. Just a spectacular quarter for both Hoka and UGG sales. And I needed that one, guys, big time. But I need this next one even more. So we're going to talk about that maybe on Thursday. So if you're not subscribed to the channel, you don't have the bell set, you better set it because I think it's Thursday, but you never know with Dave in Mexico now.
I think I'm free Thursday. It's
Are you?
it's
At
today's
least
Taco
until he
Tuesday.
gets a consistent wireless or a consistent internet plan.
I
Yeah.
bought
So
the best I could get, and it's so much better than it was 2 days ago. And I'm still waiting for Starlink. Let's get back to fear and greed though, because
yeah.
the fear and greed index, I tried to find data on if you had just like blindly followed the fear and greed index, and someone put together a study back testing that over time, over 5-year periods, 10, 15, and it historically has outperformed the market. If you were just purely to be, when it hits extreme fear or when it hits a certain number, you buy, and when it hits a certain number on the greed, you sell. And it did, over time, market goes up, but it was able to outperform the just buy and hold S&P by
Who is
a
going to make that
reasonable
ETF?
amount.
Who's going to make the ETF, the fear and greed ETF?
I mean,
So
I'm surprised it doesn't
I
exist.
feel I feel like Meet Kevin's probably already working on it. But
Yeah, he might be. That'd be awesome. If you're listening to me, Kevin, I'll put my money in the fear and
I,
greed ETF.
Can
so
we
I
talk
feel
about
like if
one
there
other
were
thing though? The Halloween effect, because today is Halloween, and this is, how I love the sell in May and go away. The exact opposite happens on Halloween day, and it's called the Halloween effect. Historically, stock prices increase more from November through the end of April, the exact opposite of sell in May and go away. And researchers speculate it may have something to do with the timing and length of summer vacations. It's also helped by some of the historical things that you were talking about, Chris. Black Tuesday was in October. Black Monday was in October. March of 2020 was in that 6 months. If you were to also have an ETF that just held for 6 months and then sat on the sideline for 6 months, it would outperform the buy and hold S&P 500. So just a little interesting thing. October 31st is the beginning of welcome back to the stock market.
Well, let's hope so. Man, I just want stability, but at the same time, man, you just can't control these macro moves, dude. They're just going to happen as they happen. I will say that next year being an election year, Jordan, isn't the general consensus that the Fed is going to have to just chill out a little bit at some point as we get into the election year because they don't like to mess with that too much, right? So they're
Well, I
trying
don't
to
know
get
if it
it out
has
of the way
anything to
now.
do with the election year. I think if interest rates, I mean, if inflation starts to take back off again, then I think that they kind of have to
Have to
attack
do it.
that. But what I think you're seeing and what they've been saying is that with the long end correcting up, that they're having to do less work, right? And that so for a while, the long end of the curve had been sitting at like the 30-year bond had been sitting 3.5 to 4%. And then we had this really big steepener to where the 30-year yield has gone to 5%, the 10-year just sub 5%, without the Fed having to do any additional work. And so that's been net tightening that they didn't have to do.
Okay.
So
So
so that's kind of the consensus right now is that maybe they don't have to tighten anymore because the market's doing the work for them on the long end.
but how about all this stuff about employment that they want to basically see net negative employment before
Do
they're
they? I
comfortable?
don't think they. I don't think they necessarily care one way or the other. I think they would say if they did. I think they want to see inflation come down. Now, if you see unemployment start to rise, that should have an effect, right? So they're interrelated, but I don't think that's one of their metrics. I think their metric is that they want, because the other problem with that is that they've got, they do want to see different groups within America do well, and we know that recessions tend to disproportionately affect certain groups of people, and I don't think that they necessarily want that. What they want is just steady inflation. They want that inflation number to be around 2%.
Gotcha. Well, listen, what I love is that we're finally seeing stocks here at reasonable valuations, and I absolutely love it. I love that when we've been debating in the Dumb Money Discord. For those of you all that aren't in it, totally free, dumbmoney.tv/Discord. We've been debating what do we do going into Crocs earnings, right? Tomorrow, in 2 days from now.
Is it tomorrow?
No, in 2 days, November 2nd. I think it's the morning of November 2nd. And I keep telling everyone, I pulled every piece of data I could possibly pull on Crocs over the past month. I'm on the fence. I mean, there are a lot of questions domestically with Crocs and Hey Dude. I do think that Crocs are going to have maybe the most spectacular quarter internationally that they've ever seen, at least in Asia. I think, the Asia traction for Crocs has been stunning, stunning this summer. I've never seen the data look so good. I'm seeing data out of Korea, South Korea, that appears to show that interest in Crocs this summer were up by a factor of 2. Okay, 2x. It's harder to get that type of data in China, but it appears that interest for Crocs in China was up by 2x. It doesn't necessarily mean that sales are going to be up 2x, but it's just astonishing how well of a quarter it looks like Crocs had across all of Asia. Now, that said, in this market, it only takes one piece of bad news during an earnings report to screw up the whole damn thing. So are they going to be pessimistic when it comes to guidance for US Hey Dude sales or US Croc sales? I don't know. Maybe. And if they are, that could screw up the earnings report. But what I love is that we're talking about a stock that's at 8 PE now and cash flowing and growing. Like, we weren't able to say that right over the past 6-7 years. You know how hard it's been to find companies trading in single digit PEs or even low double digit PEs? There are good companies out there. There are. You have to find them, and they're at much more reasonable levels now than they have been for the past decade. And that's a gift to investors. So, like I said, I'm kind of on the fence for Crocs this earnings because I don't know what investors are going to care most about. But man, you saw that tweet I sent yesterday with those tote bags and the backpacks. Dude, I am so excited for Crocs in 2024. They are releasing finally the Crocs bag line, which I've been begging them to do for years. there are other people in the marketplace that are making bags that people think are made by Crocs, which is
Yeah,
insane.
have you seen the bag? The bags look really good. I hope they, and I'm sure they will. They need to expand the color options, but they look
Yeah,
really
I
good.
mean, but that's why they're releasing this in the fall, because no one wants this stuff in the fall, right? But
Correct.
they're just testing it. They're
Or
trying to
like black,
see,
white, and hot pink on the tote bag. It's come on. People want the baby blues and the yellows. Come on.
but Jordan, they're going to save that for
They
the
will for
spring and
spring. Yeah,
summer line.
springtime is when you want to get your baby blue bag.
Yeah, guys, I really believe this is a big, big deal, and that's kind of why I did go in a little harder on Crocs going into this earnings, not because I was ultra confident or had high conviction in how it would react for earnings, but knowing that the company has something to talk about in terms of 24, what's going to drive the growth in 24. I think is really important. So again, I'm on the fence, but I am long Crocs going into earnings. We'll see. We'll see what happens. There's another stock I'm more interested in, and we'll talk about that on Thursday. So what else, guys? Dave, you're not trick or treating in Mexico for Halloween, huh?
I don't think so. I don't know if my doorbell is going to ring. I don't even know if my doorbell works here. But I did see someone
Um,
ask in the comments if I left the USA permanently. No, no. This is my vacation home, but I like to be on vacation a lot. So we'll see how we'll see how much time I spend here versus there.
so someone asked in the comments what's going on with Sphere. Did I say that right? Sphere? Did I say it for
Maybe.
the first time?
I think you
Sphere?
said it right the first time, but not the second time. Sphere.
Um, listen, the thesis on Sphere in Vegas, we've talked about this a number of times, has always been to sell into the hype. I sold most of my Sphere into the hype of the opening, right? Like that's when I sold it. Uh, that's it. I kept a little bit because I think it's kind of cool, and I mean, who knows? But I exited most of my Sphere, right? I will be going there this New Year's, and I'll be reporting back. Dave, are you still contemplating doing that trip? You should do
Yeah,
it.
yeah, I'm contemplating it. I have not booked
We
my
got
tickets yet.
so we got Post Malone concert tickets for New Year's Eve. It's going to be amazing at the new uh what is it called? The new Fountain Blue in Vegas. And then Sphere is the night before New Year's. So it's gonna be a great 48-hour trip. You can pull it off.
That's about the exact maximum amount of time I would want to spend in Vegas.
It's not,
Mine's
I think it's
0
like
days.
36 hours.
0.
That said, it's not a cheap trip, but it's a good
Yeah,
trip.
a lot of entertainment expenses there.
Yeah. God, what else? We hadn't been on in a few weeks now. Any other questions anyone else has
But we
for
haven't
us?
really made any major trades, right? We
Well, yeah,
missed
I mean,
one.
we did.
Yeah,
Deck was a major trade.
and I
And it
apologize
worked.
for not having internet. You could have done a show without me, but we saw how that went the last time.
Yeah, so for those of y'all that don't follow all us on the socials, it's really important because we didn't have time to do a deck show, but I did disclose that on Twitter at Chris Camillo, and I think Dumb Money Twitter, Dumb Money TV, retweeted that tweet. So it's important to follow us all over the place, not because we want you mimicking our trades, but if we surface something interesting, we want you to have the opportunity to vet it yourself. Also, poke holes in our thesis. Let's chat about it on the Discord channel. There's some really high quality conversations, I think, the last couple months happening in Discord. And, I would definitely be there, guys, because I think there's not enough of this community that's hanging out in Discord in the research trade channel of Discord and surfacing things and helping the community vet some of these investments. We need shared intelligence now more than ever. And on Thursday, I'm going to ask the community to help me with some research on this new trade. So please watch the show on Thursday, and maybe this will be the next
put to
step.
work.
We'll see. What do you guys think about SBF?
Discord is the place to go. You'll get a free invite by going there. You get in for free. There's nobody will ever ask you for money, and if they do, they're going to get banned and booted from the Discord. We're not trying to make money off of you guys. We are just here to share what we're doing and talk about stocks. And this has been our hobby, and we decided to turn it into a show.
I want to make money off the community. I want to make money off their ideas, and
yes, not by having them send us their Bitcoin. don't ever send money to us asking for money, because it's not us.
If you're sending money to us because we're asking for money, it's not us.
Okay, I have a question for both you guys. Are you concerned at all about this impending war? Now, besides the obvious negatives to humanity, as an investor, are you concerned that this will lead to something that could massively impact our economy and the market at large?
Short
Not
answer.
yet. I don't think so yet. I think if you wanted to, mess around with it, you can buy defense stocks. So basically what happens is that whenever you hear that we're giving $100 billion worth of aid to Ukraine and to Israel, that's code for we're replenishing our weapons caches, right? And so they're spending a good portion of those funds go to defense companies, basically. So that's, if you wanted to just mess around with it, I'm not, because I don't know if those things pass or not, or I haven't done the research on which companies benefit versus others, but I would think that defense stocks do well throughout this. I could be wrong, not investment advice, but other than that, as far as what will it do to the global economy, I'm not there yet. I'm not.
Yeah,
but generally,
part of me feels that trade is tired at this point. It's been
I think the trade's tired too. Yeah, so I'm that's why I'm not doing it.
Jordan, I spent the last couple days doing a lot of analysis on a stock that made you a lot of money the past few years, and I was curious, and I was thinking about shorting them. Because I'm really looking for a company to short. I don't have enough short positions right now.
Yeah.
And Signet Jewelers, and I'm not shorting them, but I pulled data on every single one of their jewelry stores because they own all of them now. Not only do they own Zales and Jared and literally every jewelry store that's nationally
every mall jewelry store you could think of, strip center,
but Jordan, but they went out and bought Blue Nile and Diamonds Direct. They bought the internet. They literally own everything in jewelry. So I find it fascinating that now you can basically invest long and short on a pure play company that essentially owns the national jewelry market, every facet of it, online and offline. And the bull take on this company, I know this is totally random, but the bull take on this company is that after buying Blue Nile and Diamonds Direct, that they are going to be able to sync those two worlds. In fact, they're opening Blue Nile retail stores so that you could feel more comfortable buying diamonds online because now there's an in-person, you can take it to a store, a retail store afterwards. My concern is the consumer recession part of this recession, right? When consumers get hit, how can we not see that jewelry has to get hit so freaking hard, right? I mean, that
just realize why we invested, or I don't know if you invested, but why I invested in the first place, and that's because everybody was going out and buying a watch or buying earrings or whatever it happens to be during, the big money dump by the Fed, and that is all gone. People's credit cards are at all-time highs. Delinquencies are picking up. We know all this. We know these have been talking points on national media for a long time, and so what are you going to cut out? I think you cut out, consumer discretionary things like this. So yeah, I'm with you.
But
But do you want
but
to
it just
short it?
seems
I don't know.
it seems like the part of this consumer discretionary, that stock is
Yeah,
so volatile. It's so
yeah,
volatile. I mean, it was trading at like 90% less than where it is today during the pandemic. It was trading at like
yeah,
10 bucks a share, sub 10 bucks a
yeah.
share. I I just feel like, and I'm still going to do more work on them, but I'm looking for a couple things to short to balance my portfolio out, and that's one of them. The other one that I think is fascinating is Match.com, because if you've been following any of the TikTok kind of viral stories the past 6 months, it feels like so many people, guys specifically, have kind of just like parted ways with the dating world. That's like a trend right now on TikTok. Are guys just kind of giving up? And I assume it's temporary, right? But they're so frustrated with, all these videos going around about how women are basically only connecting with the top 5%, 10% of guys on all these dating apps, and they're just quitting them. So, at least that's the thesis, is that they're quitting them, right? They're saying they're quitting them, whether they are or aren't. But what's fascinating is that these dating apps like Tinder are now coming out with like a $500 a month package for guys to basically guarantee that they're going to be seen. Okay. And because they're showing that guys that are willing to spend the money, it almost like puts them in a place where they can be seen. So is that a desperation move though by the dating apps? And if so, could the dating apps be on the verge of collapse? Now, again, I know I'm talking about a lot of downer short plays here, and I haven't pulled the trigger on either of those yet. Uh, but there is a third that I pulled the trigger on just for a couple days. I wonder how it's doing today. Have you seen what's going on? Speaking of the war, have you seen what's going on with the Starbucks boycott? Uh,
There's a
so
Starbucks boycott. I did not know this.
yes. So basically, do you remember a few weeks ago, the Starbucks union, workers union, which is a fairly small workers union, came out with a one pager statement on their letterhead that included the Starbucks logo that was basically pro Palestine, uh, anti Israel. And that
Hmm.
almost started a boycott. But Starbucks came out and said, you cannot make a political statement that's affiliated with our brand and our trademark. We are suing you. And when Starbucks did that, and Starbucks is just kind of taking a neutral stance, right?
So
They're
it,
like, you
it was
can't do
the
that with their
employee union that did this.
the Starbucks employee union. When Starbucks did that, it it resulted in massive backlash from pro-Palestinian groups around the world saying that Starbucks is now siding with Israel. And over the past 4 or 5 days, the amount of virality that I've seen on TikTok, the anti-Starbucks movement on TikTok
Hmm.
has gone absolutely nuts. People are quitting their jobs at Starbucks. Starbucks that are in the Middle East, Starbucks that are in Turkey are empty. It appears that a couple of them are potentially already going out of business. Now, listen, that's a very small portion of Starbucks, but Starbucks here in the US, people have started to protest. Kids are going around to Starbucks and ordering, not just kids, adults, ordering huge orders at the drive through and then just taking off and leaving and not paying for or taking their coffees. There is a viral campaign on TikTok where people are showing their non-Starbucks coffee to like the beat of a song and then talking about, why? You know what's so special about this coffee? It doesn't commit genocide. And like this is like gone full viral. Like I'm like, it's wild. I've never seen anything like this. And so the problem is, if you want to short Starbucks on this potential boycott, the problem is that Starbucks earnings are tomorrow or the next day. And I think earnings are way more important than the boycott right at this very second. So you kind of have to exit that short position before earnings and maybe get back into it after. I don't want to be shorting Starbucks into earnings because
Yeah,
I did
you
not do the
think their
work.
earnings are going to be fine, but then
I don't
so
know.
it's
I don't
possible
know
that
what
maybe there's your
I
short
didn't
opportunity.
I didn't do the work, but Dave, there are lots of Starbucks employees coming out and saying that over the past 5 days, they've seen their store traffic go down by like 20 to 25% on this, okay? So understand something, it's not just like who we think might be pro-Palestinian. This pro-Palestinian movement, I'm not gonna get involved with
Look, I think
talking about.
that's what I think every management team needs to learn is just don't get involved. There's no winning way to get, through something like this
So what's fascinating,
by
Jordan,
taking a stand.
is that Starbucks did what they did because they didn't want to get involved. So
Yeah,
when the notice was put out by the
I get
Starbucks
it.
union, people started threatening Starbucks to boycott them on the other side.
Right.
Pro-Israel threatened to
That's
boycott
the
them.
problem.
So
The second you just touch either side of it,
Yeah,
you're
but
in
but
trouble.
what they tried to do is say, "Hey, we just
Yeah.
don't want
No, I
anyone
get it.
using our trademark to make any political statements."
Yeah.
And then they got deep
They got hit
By
boycotting
doing
from
for
the
that,
being
other
neutral.
by
side.
then
Yeah,
mentioning it now, they've opened the can.
You have to be so careful.
Yeah.
It's so tough. It's so tough. Um,
well, and the speed with which momentum can be gained on TikTok and Twitter. I mean, yeah, brands have a real delicate balance right now, trying to be either neutral or like you take a misstep and someone's going to be against you. Look at the Bud Light thing. Like Bud Light is still just devastated. I don't know that they'll ever be able to sell another Bud Light in America.
yeah, no, they'll be able to sell. They'll just be able to sell about 28% less. That's all in
Exactly.
perpetuity. Do you think that Bud Light's uh, sponsorship, rumored $100 million sponsorship of the UFC, you think that's going to make any difference? I don't think so. I don't think it's going to
I
make
think
any
people have
difference.
made up their mind on this and that they've changed their behavior and it just is what it is now.
I I tend to agree. By the way, Jordan, when we're talking about what to watch in terms of the consumer recession, because I do think it's really important for us investors,
Yeah.
I sent you a heat map of the US that I got from one of my data providers that I pay a lot of money to. And I feel like I have this data, so I want to kind of share it really quickly with the community here. There's categories, they have the strongest and the weakest categories on a year over year basis. And the weakest categories are let's see here. NFT marketplaces, obviously, down 60% over the past 4 weeks. Metaverse down 43%. Streaming down 20%. E-shop builders down 19%. Dating sites, that's what I talked about, right? Down
Mhm.
18%. Health and wellness down 18%. In mode, which was one of our biggest trades of the year, which we got out of, thank goodness, 2 quarters ago on earnings, they've been slaughtered because people are pulling back on health and wellness even. Social ad managers down 11%, vertical internet marketplace down 9%, experience management software as a service down 9%, and communication software as a service down 9%. And then they have weakest trends, entertainment down 11, cruise lines down 6, SMB HCM, whatever that is, down 6. Used car marketplace down 5%. Dating sites down 3. Again, study and writing ed tech down 3. Airlines down 2. used cars are another area where I want to spend some time. I feel like
Yeah.
it's a market that started to implode, but then kind of recovered weirdly, like Carvana.
The problem is that new cars are tight too for a multitude of reasons, and so you've still got to replace your car, right?
But
It's
but do
it's
you think
these are kind of these weird supply chain issues that have just carried forward, right? And so the reason that housing hasn't crashed is because the supply side isn't there, so you don't have people puking out their inventory right now.
no, Carvana still has come down. I wish I would have shorted them when it popped back up to 56, all the way down to 27 again. It got cut in half. It's a stock.
Yeah.
I just
That
want to
could get
short
cut in half again. The problem is they got a lifeline, so
Yeah, I know. Also, the CarMaxes of the world, really anyone that's deeply in that pre-owned space. I don't know, dude. Ford and GM, they resolved their union issues, right? So I would hope that in time they can start ramping up production again. I would hope. I don't know. I want to have a short play here someplace. So, guys, if you're
yeah.
in the Discord community and share your best
Share your
short
best shorts.
ideas,
Yeah.
only as a hedge, because I'm done with hedging the entire market. I won't do it anymore. Like I'm done hedging the market, but I would like to have a short hedge somewhere in my portfolio. All right,
Sounds
guys.
reasonable.
Dave,
All
I know
right.
you probably have a busy day in Mexico. What are you doing the rest of the day?
Oh, I'm gonna go sit on the beach for a little bit. It is Taco Tuesday, so I'm gonna just head down the coast about a mile, and there's a little taco stand that has my name on it. Yeah, it's a rough
So,
life.
so
Dave's
same as
taco stand.
yesterday.
I want to go.
It's
Same
great.
as
It's
yesterday.
great. I want to open a restaurant called Dave's Tex-Mex because that's the one thing I found. A couple of Tex-Mex-esque things, but that's very different than real Mexico food. So I need to work on that as my next startup idea is going to be a Tex-Mex on the beach.
All right. Well, happy Halloween, everyone. And
Happy Halloween. Get out there, be safe, and we're Dumb Money. We will see you hopefully on Thursday.